Ghana has been beating Nigeria since 2021 started in terms of foreign direct investment, because that investment into Nigeria is slumping to its lowest in 11 years. At the end of June this year, specifically, FDI inflows dropped to $77.9 million in the month of April to June, and that's about 49.6% decline from the first quarter of this year, which was about 154.76, and that's 47.5% decline on a year-on-year basis. That's on one side. You look at the diaspora remittances, where the figure of direct inflows is lower than the estimated $34 billion annual level, because a chunk of these remittances are conducted via unofficial channels that the central bank has voiced its displeasure and have been trying to narrow down. Let's discuss the country's poor foreign investments, debts, foreign currency, and remittances. With me now is a development economist, Professor Kenneth Ife. He joins me live from our Abuja studios. It's good to see you again, a good professor. Welcome to the show.
Thank you very much for having me.
We have some very grim numbers in front of us, but let me just ask you for what we call facts behind the figures. What are the key issues around Nigeria's very sharp decline in foreign direct investment inflows? $80 million in the second quarter, one of the lowest the country has seen in history.
It's a very pathetic figure, to be honest. But you know, it's been going down since over the last 6 years. And for us to finish last year with less than $1 billion, means that even this year, I'm not even sure we'll get anywhere near that $1 billion. But I think we need a wider conversation on how to target investment, because foreign direct investment is a hot business. Every country is involved in that. And at the same time, there are $9 trillion of sovereign investment fund looking for where to invest. So it seems ironic. But having said that, we need a higher order of targeting in our foreign direct investment. And if you look at the oil side, we don't even see much coming in again in the petroleum sector. But we should, even with this, granted that we were in a flux, now that we have sorted out the PIA Act, now there should be a clear signal on which way to go on FDI on midstream and downstream industries. We should up our game there. Then also, sometime last year, around January, I talked to the biggest estate investor in China, who has about 68 mega industrial estates. And he was happy to come to Nigeria to invest $10 billion in building 10 free trade zones and do what he was doing to make sure that they can now use Nigeria as a staging post to assemble some of the equipment and send them back to America under AGOA. And it makes a lot of sense to him that saving 20% the duty from America and then getting through the back door. So there are over 35 FTZ in the country and more free zones being contemplated. And we should focus on getting at people who should work in that area. After all, that's how China started. China started by having peripheral special economic zones around it.
Professor Kent, we have about 42 free economic zones. Only about 12 of them are functioning, and these were free economic zones that we've been talking about and working on since the Obasanjo's administration. Today, they're just operating for a few years. We haven't really seen anything on the ground. So my question again, what is the problem with our foreign direct investment drive that we are now hitting the bottom of the barrel? We're close to ground zero, you agree?
No, I asked the same question to the man that I brought in. And he actually wanted to come in February back again, because he came in and met so many ministers and some governors. But was coming back in full force in February, then the COVID started. Now they've deferred for 2 years. The answers he gave to me is that it's an aggressive business. You cannot get a free trade and sit down and wait for people to come. You have to look for resources, find people who are going to invest on infrastructure. You build the estates. In fact, what they do is that worldwide, they scout for investors, get the plan for their factory, build the factory, and they will come in. and then also do standard modules that people can move into. If you want people to come and invest their money in infrastructure in your zone, you must be joking. Because people don't want to come and build infrastructure. They want to come in, move in, and then make sure that everything is lease, rental. All your companies, all lease. The day you bring your body language, they'll carry their briefcase and leave the country. So it's too much to ask them to come and invest in infrastructure. So if you are taking, you have to go out for this and find special FEs, SEZ developers who will come and develop the properties, and people will come and lease them and start producing from day one. So if they dismantle your equipment in China and bring them here, you start producing the following day, and not to come here and invest on infrastructure and you'll be going up and down for 2 years, you still haven't started.
But very quickly, with Nigeria's borrowing for a whole lot of, is it the same thing as foreign direct investment? This level of borrowings we're currently on, this money that are being invested, because some government officials say, well, that's the same thing as investment, by the way.
No, not at all. There's a big gulf between those two. The investors are investing in the existing industries, in the new businesses, and it's not the same. I mean, government knows that development partners that are giving you money or development finance institutions, they are giving you money based on a case that they have in front of them, and you are applying for those based on the Fiscal Responsibility Act 2007 that guides how you invest, where you invest, and other conditions around that. So they are not different. They are different things altogether, and I don't think people should confuse both.
Well, we have a whole lot to discuss, because the conversation, Professor Kenneth Ife, is around how to break the jinx. Again, my point will come when you talk about when you talk about diaspora remittances, because this is one very key issue. But if we keep borrowing, we're applying that into investment, isn't it? Some level of infrastructure investment.
That's true, actually. But I think we need to give more thoughts on how we can strategically leverage the diaspora remittance, because the diaspora remittances are over 25 times more than the foreign direct investment, and is 7.5 times more than all the overseas development assistance from development partners. So it's a very serious source. And one of the things that comes to my mind is we could have a special diaspora bond that is targeted to all these assets, reviving all these assets that we are trying to sell, and find the one that are attractive. So that we can have option. We can have an option.
Professor Kenneth, when we come back, that's exactly where I was leading you to. Stand by, Professor Kenneth Ife, and everyone will be right back into. Welcome back to the show. And thank you for standing by, Professor Kenneth Ife at Abuja Studios. The conversation we're having earlier, just before we went on break, Prof, has to do with the diaspora remittances. And you're talking about why this is very important, considering the level of what we have, some coming through direct, what you can call official sources, others going through the back door, in the manner of speaking, trying to understand why folks do that. But again, it's your money. But you believe that we have diaspora remittances that is big enough for us to leverage, but it doesn't look like that.
Well, I think it's around $34 billion. Statistics says it's about 26, but I know that 1/4 are not.
So we're not even sure what the official figure really is, because I look at that. I try to look at it and say, what is the exact figure really? Because the central bank says between now and 2023 is going to be $34 billion. Then a couple of months ago, they said we're already at 34 already. So I'm trying to wonder what happened. Because last year, during the pandemic, we were just down to about $17 billion or so. So where is the money?
There are invisible transfers as well. There are invisible transfers. Some of them are just direct individuals. Some are with BDCs. There are a lot of other sources that are exploring. The thing is, there was such a huge excitement when we talked about diaspora bond about 2-3 years ago, some years ago, and then suddenly the bond was executed, and we came to the National Assembly, and many people were saying, many of the diaspora kids said, they didn't know anything, they didn't see anything. So the demand, the appetite is still there. And then it offers reasonable rates. I mean, look at the rates now on bonds. It's about 7%, 8%. It's very attractive, for dollar-based bonds. So they will be interested. But if we say, for example, to tactically link this remittance to something tangible, let's say, for example, we go for a $10 billion diaspora bond, and then we identify 20, 30. So there are hundreds of government companies waiting to be privatized. We have identified 20 or 30 that are potentially good and viable and then list it as one of the things we are going to use that money for, and give the people an option. An option on those. I will go for it, because if I have an option of first refusal on any of these assets, we'll go for it. It's easy. When we are attracting our money into the pot kitty at reasonable rate, and then we're having an option to go and own some of these assets. Do you think
Nigerians in diaspora has the strong appetite to invest in the country, by the way? When they look at the entire environment, are they encouraged to do so?
No, I think that, first of all, don't forget that this is bond. And you don't have debt forgiveness on bond. So if it is 7%, it's 7%, you're going to pay that back.
Yeah.
But if it is a development finance institutions, of course, you can go and ask for debt forgiveness. China says, I will deal with countries on a case-to-case basis. And it's very unlikely that they will.
President Buhari is asking for. President Buhari last week asked for debt forgiveness at the UN General Assembly. So here we are doing Eurobond. Here we have diaspora remittances. We haven't really fixed. We'll get to the FX issue. But here is Mr. President still asking for debt forgiveness, while he's also asking the multilaterals to give him several billions of dollars.
It's an irony, but the thing is, he has to ask for this because he probably has another one more term to go, another one more year to go to the next one before he leaves office. So even as he's speaking about this, the discussion has to begin early, because COVID has crippled many countries in Africa. So he's speaking not just for Nigeria, but for many African countries that don't have that strong voice.
But Nigeria said
so
last
it's an
year,
agenda that they have started talking about.
Last year, Nigeria says it's not going to ask for any moratorium on the repayment, so it's not asking for debt forgiveness. Now Mr. President himself is the one asking for that.
Well, it's just to put it on the plate, on the table. There's nothing wrong in putting it on the table, because it is a necessary discussion that has to take place. There are many countries that are bleeding to death. Look, Nigeria is all banks, multinational development banks, bilateral lenders want to lend to Nigeria, because we haven't defaulted on our loan repair service, even though it's so high, 98% in the first 6 months of our revenue. Many countries are still there to lend. So talk to lending managers, lend. That's when Nigeria crops up.
Because they know,
the computer says lend, because we haven't defaulted.
Professor, yes, we haven't defaulted. That is good behavior from the lender's perspective. But the question is, we haven't really been productive either at home, because we don't have foreign direct investment. We're short on revenue locally, even in local currency. So everybody will want to lend to you because they see that as a country, you're not just ramping, you're not raising your game in a manner of speaking, but you can pay your debt. So that brings me to the issue. How do we raise up on productivity? Please go ahead, Prof.
Well, the thing is, there are gaps. We know that we are very attractive borrower, so people are throwing money at us, but they know that we are a resource-rich country. They know that we are underpowered. We're only collecting our revenue to GDP is only 6%, 6 to 7%. But it should be around 20% according to ECOWAS macroeconomic convergence criteria. It's about 18% on the average. So they know that the room are there. Then we also see that the PIA has suddenly given us the possibility of doubling the revenue next year. And then we've seen the infrastructure company kicking in, got 1 trillion capitalization, looking for 15 trillion. We know that is a game changer, that it will reduce the burden and then build up more capacity on the infrastructure. We also know that they are clamping down on the waivers, the tax waivers, and all the illicit transfers. So, which alone is more than the revenue. So there are prospects that we could actually generate 3 times more revenue in the foreseeable future, 3 to 4 times more. So that brings down the debate on debt sustainability, because the chances are there. So they see those. When they are giving you money, they see the possibility that you can actually pay these monies back. They see the inefficiencies all over the system.
But here we are we are not raising the game in a manner of speaking. And you as a development economist know that the best part of borrowing for a sovereign is to borrow locally in local currency. But here we are borrowing in foreign currencies. And now the pressure is on the Naira that is like in a fry pan and it's being gassed under, and we keep stirring it, hoping that it's not going to get bumped.
Well, let me say something to you. You know, when we are looking for foreign direct investment, which is really one of the ways of bringing dollar into the equation, and we are looking at asymmetries and inconsistencies in the oil revenue, that we are not actually getting accretion to reserves from those oil revenue, even though the bench prices, there are gaps there. All of these are inefficiencies in the system, but they know that. And then we can't continue. If Dangote oil refinery starts today, you have to kiss goodbye to all the shenanigans going on with hemorrhaging our dollar resources for importing PMX. You know, that is likely to be the case. But it takes time. It takes time. And also, don't discount. I think that the local investors like the Dangote of this world and all these people who invested in power supply, that you could mobilize them to be on the front seat on seeking direct investment, rather than spend too much time going around and energy chasing what. Either you get very targeted on the people you really want to come to your SEZ, or use the ones that are in the country that are confident and put. Dangote put $22 billion. I mean, and we're looking for $1 billion, losing sleep. When people of his type can get more direct investment into our country in various ways, much more efficiently than what we are seeing at the moment.
How much more do you think we can do to stabilize the Naira and make sure that a bigger chunk of the diaspora remittances coming through the official window rather than through the back door?
Well, the thing is that we need to stem the tide of private demand for dollar, which is aggravated by the security situation and the fact that people are, and the speculation in the forex market. So when that speculation is so intense, people are less confident in handling Naira. They rather hold dollar. And the speculation is about the future value of the Naira, the future exchange rate going forward. So, and then of course, you know, we have a high inflation. And so that doesn't give investors, more confidence to invest. And then also the domestic people that have all this Naira don't want to hold the Naira. They just want to, everybody wants to hold dollar and increase the realization of our economy. Well, that wouldn't go on forever.
Well, Prof, if you give me the Naira, I'm going to hold it, no matter the size. If you have Naira to give me, I'm going to hold it. So if you have it, whatever size it is, I'm holding the Naira, by the way. You'll be surprised what I'm going to do with it. Thank you so much. We appreciate your perspectives on this. I'm not saying no to the dollar as well, by the way, just in case you said Bolson didn't say that. Professor Kenneth Ife, development economist from our Abuja studios. Have a pleasant evening.